I'll show him Avkash's vision and how we wanted to translate the issue of power, choice, and change into a vision that is practically doable and which we could evaluate and be held accountable for. So if we look at the first part of our vision, it was really ensuring however, this would not have been possible without coming up with affordable microfinance services, targeting low-income households and in particular women. And then looking at the entire paradigm in terms of women's education and the social limitations that they have, we said financial literacy combined with access to credit was extremely important to bind the entire vision together. If you move to the next slide, our mission is essentially to holistically transform the life of low-income households, in particular women, by providing them cost-effective and quality microfinance plus services. So we look at microfinance with financial services along with capacity building and enterprise development as a key process of change. Practically speaking, how are we constituted? What was the institution all about? So the first notion that we introduced in Pakistan in 1996, which is something that had not been done before, microfinance was essentially part of a rural development methodology. It was one tool to address the gaps of development in rural areas. So the first thing we did was we established a focused and specialized microfinance institution, which hadn't been done before, essentially replicating the Grameen Bank. However, at the same time, we had a specific focus on women, and our purpose was to provide a full suite of products that dealt with women's financial needs, and which also looked at the dimensions of poverty within the household. Now, this is interesting because when we started in 1996, we did a research to see for every dollar that is dispersed as microloans, and at that time, microfinance was just limited to microcredit. How much of that went to women? And we discovered that for every dollar, 20 cents went to women. So we felt that there was an inherent discrimination, even within the kind of methodologies and the kinds of approaches and the kind of product lines that were being offered against women. So their access was limited. Then, of course, the third aspect of our pro-women approach was having a microfinance plus strategy, which looked both at capacity building of women entrepreneurs and their families. And I'll come to that piece in a little bit, how we expanded the focus on education and capacity building from women entrepreneurs to their families and to the communities, and why that is important, especially to address below-the-line barriers related to social barriers. And of course, we also wanted to demonstrate the business case for investing in women, providing financial services to women within Pakistan, setting up a specialized entity and making sure that it was financially viable. That is very important for us. We wanted to demonstrate that an institution that targets small loans, focuses them on women, builds the capacity of women, that institution could be sustainable. And then, of course, scalability was very important to us. We were, at the first 2 years of our organization, from 96 to 98, we were a pilot research program. But with time, we needed to scale that up to demonstrate the importance of women's economic participation. And innovation was a very important piece. We may have started with one type of product. What we do today is very different from what we did in the beginning. You know, just to give you a very, very quick update, we started with the traditional Grameen group lending program. Today, we do individual loans targeting women's businesses, and we do 5 or 6 sectors that we specialize in, and we look at the value chain for those sectors. So it's a very, very different approach that we follow. So if we move to the next slide, excuse me, let's look at how did we practically eradicate the above the line and below the line barriers over time. So if you look at financial barriers, and we've already talked about the two kinds of barriers, one is about access and the other is about control. We looked at enhancing women's economic agency. How did we do that? Well, the green methodology in the beginning made a lot of sense. It talked about solidarity lending, it talked about group management, it talked about devolving certain practices and building communities to make financial decisions. And when we talk about communities, we talk about women groups in particular. So that worked really well in the beginning when you needed to establish a sort of associative, strengthened model where it was a women-to-women contact. And it's interesting that when we started out in 2003, our mantra was microfinance for women by women. So we only targeted women clients, which we continue to do today also, but through female staff. It was only after 2003 that we sort of grappled with the notion of gender development, and we realized that we were discriminating against men, but not being an equal opportunity organization, and that women's issues were actually social issues. They traversed gender, and it was important to get men involved in finding a solution to address many of the constraints that women face economically. So that's when we switched over. But in the beginning, the first almost 8 to 9 years of our existence, we actually ensured that economic agency was important. We also looked at promoting affordable savings. We felt that it wasn't enough to talk about microcredit. We needed to expand the frontiers of financial products and financial services. And then when it came to men's impact on decision-making within women's businesses, we realized it was very important to work with men and also do more with them. And we introduced the notion of gender justice training. So we work with men in communities and the spouses of our clients and build up their understanding on gender awareness and other related matters. Very quickly, if you look at economic barriers, the first thing we did was related to the lending process. So we talked about gender-friendly loans. We looked at sectors that women work in. We looked at graduated lending schemes. We built up a business development services approach. Incidentally, our loan officers, what is generally credit officers, as they're generally known, are called business development officers. So they work as advisory, individuals or relationship managers for our clients as well. And then we do financial literacy trainings to help them enhance their outreach and to manage their business expenditures and thereby enhance their profits. On the social cultural barriers, of course, we talked about associative strength, which was very important in the first 10 years of our organization's work. And then we moved to individual lending because many of these issues had been dealt. Women's self-confidence, for example, in fact, assessments show that almost 85% of the women who work with us for 3 to 4 years feel that their self-confidence and self-worth has been enhanced. So that change element from a self-actualization perspective is quite obvious. And then, of course, we looked at broadening products and undertaking microfinance plus, as I've shared with you earlier also, to work with men and communities. Political and legal barriers is something that we started looking at when we began to understand that having an identity is a documented identity is very important. Whether it comes to having a bank account or whether it comes to having a national identity card. In Pakistan, everybody has to have a national identity card in order to be included in the economy, and number two, to be able to vote. So what we did over the past 3 years is, 3-4 years, we started getting, we made it mandatory for all our clients to get national identity cards. That is the first step towards documentation of at least their individual identity in the system. However, there's a long way that we have to go on legal rights. We did research on this and we discovered that if we wanted women to get access to property rights, it would take us 8 years to, let's say, we had just to give you an example, we initiated a home improvement loan. And one of the requirements in the home improvement loan was that there should be joint property rights. So the man and the woman should be ownership of the property, which should be joint. However, when we began to look at transfer of property, we discovered that a lot of times people living in slums and low-income communities have de facto rights as opposed to de jure. So they don't really have clear property titles. And then even if they had clear property titles, it would take us 1,100 steps to get the property transferred. So that would take us 8 years when we assessed it to get the property title changed. So legal rights are much more onerous. However, we felt that with the documentation, with the ability to vote, and with the ability to engage in the economy, women will, with time, become able to influence many of these decisions. Very quickly, what are the kind of products and services that we offer? We offer 3 kinds of credit products. One is a productive income generating loan, which looks at sectors. This is both for, there are 2 kinds of, within this there are 2 subcategories. One is for existing businesses where we do business appraisals, and the second is for startups where we do feasibility. So the tool that we use in both cases is a little different. Then we have a capital support loan in case your business fails or there is any other emergency in the family. We do give a capital, capital regeneration loan as well. And then we used to have a consumption loan, which till 2 or 3 years ago we used to offer, but since the economic downturn, we have sort of curtailed this at the moment. We may start offering it next year. We'll see how the situation pans out. Right now we offer credit for life insurance, but we're also testing a health insurance product. Our financial microfinance plus is actually 2. One is a basic financial literacy program that we run, and then we have a modular 3-day program that we run, which is a systemized financial education. And in addition to that, we also have business incubators, which are essentially targeting successful women businesses. There are 32 incubators that we have across our network, which help women to build their businesses and expand them and grow them further. So that's the microfinance plus. And in addition to that, we also do gender training, we do social theater, we do public service messages to impact on the mindset that curtails women's economic participation. We have, our growth trajectory has been quite, progressive. We currently have about 287,000 clients. 2008 to 2010, because of the financial crisis, we had to really slow down our program. So we are at about the peak that we hit was about 325,000 clients. If we look at the number of clients which we've helped, we will move on to the next slide. We have an outstanding portfolio of about 28 million. We've dispersed about 1.9 million loans and helped in total about 1.4 million families with 2.4 billion in loans. We've had a 98% recovery rate. Currently, we have 284,000 clients. We have 157 branches, and as we speak, we have opened 20 more, so this should be 177 branches in all 4 provinces of Pakistan. We have about 1,500 staff, and we maintain a 50% gender ratio. So gender diversity is very important to us. In addition to reflecting gender diversity at the level of the community, we also have this as a very important institutional value for us. Our average loan size is started originally at 4,000 rupees, which was at that time about $50, and it is in 1996. It's now about $200. So very quickly to move to the next slide, and I wanted to share with you a very interesting research that we did on savings for women, which was part of the process of when we were setting up the Kutch Microfinance Bank. One of the things we, as opposed to the kind of barriers that women face in terms of running businesses, it's very interesting, and I'm sure this is something you will see ratified in other countries as well. Women are the savers. They are the thrifty ones in the economy. That's what we saw. When we went to the men, they said, don't talk to us about savings, talk to our women. So if we look at the next slide, we did a market segmentation exercise, a demand analysis, and a product design phase. That's usually the way we always run our product design process. So we discovered that there were 2 levels of poverty saving that women were doing. One was about $22 a month, and the other was about $70 $3. So we needed to look at designing products that met the need, and this was informal savings. They were the primary savings, and as I said, they used informal sources. Why were they saving? Mostly for life cycle events, and you see that across the board for marriages and home construction. So women are the ones that are dealing with looking at investing in longer-term savings and longer-term needs of the family. So based on this very quick outcome that I'm sharing with you, we designed a commitment savings product for women, which had a 3 to 8 year horizon, and it was goal-oriented. And the minimum that you could save with us is $7, and the maximum you could save was $73, which is 500 to 5,000 rupees, which was again based on the market segmentation that we saw. And we looked at the possibility of translating this into pension savings. So if you wanted an old age, if you wanted to save up for your old age, you could also do this. This is a product that we haven't been able to pilot as yet, but the commitment savings is done really well. And then we looked at the fact that this must be voluntary. It had to be on choice. It couldn't be compulsory, and it had to be demand-driven. And since this was being offered to Kash Foundation clients through the bank, we had to make it co-branded. So essentially what we've done is an interesting option, delivery option, because low-income savings are very expensive to collect. We do an agency agreement. So what that does is that the foundation is an agent for the bank. And thereby the bank doesn't have to put in savings officers, but our own business development officers and our own current branch network does the collection. So that significantly brings down the cost of collecting these small savings. Mostly women are saving between 500 to 750 rupees, which is $5 to $7 on average per month. We have about 5,000 women who are saving in this pilot currently, and 96% of them are saving regularly and meeting their monthly obligations. If you look at clients' views on savings products, the general perception is that opening an account with the bank is full of hassles and onerous paperwork, and therefore women are scared of that. So what we did when we were designing our product was to keep the process extremely simple. And since most of Kash Foundation clients have a national identity card, that is one of the key prerequisites you need. So they didn't have to do any additional work. And the account opening form is very, very simple. It's a page and it's very easy to do, and it doesn't have too many requirements. So what are our challenges? And then I'll stop here. One of our biggest challenges is that right now, out of 100 loans, 40% of the loans are directly used by women, while 60% are invested in family enterprises. So our challenge is to see that. And when we started out, the ratio was even lower. It was 20%. So over 18 years, we've managed to bring up the ante, but it's still not in majority. Where women are earning, still the issue of control over income is there, and we need to enhance systems, and we believe that savings is one way of helping them control the income and how it's spent ultimately, because they have the right to the account. And many women, I mean, one very interesting conclusion that came out of the savings research was many women came to us and said, what about confidentiality? When they ranked return, convenience, and confidentiality was very high. And when we began to probe that, many of them said, my husband shouldn't find out how much I'm saving. One of the problems we had with group savings was exactly that everybody in the community knew how much the woman was saving and how much was in her account. Now, this is a very confidential account, and the man doesn't have access to it. So control over income can, in some ways, be managed through enhancing the suite of products. Another thing that we have a challenge for is transforming women's businesses to larger businesses. A lot of times, women tend to be at the income-generating level. So that's something we are trying to address through our business incubation labs. Then, of course, how do we deal with the double burden? Is there any ways of helping women reduce the drudgery of their lives? Is there any way of having men value the income that women bring into their homes? And again, we use gender trainings. And right now, we are also doing a public service campaign to dramatize soap opera that is looking at women's economic space. And this, we hope, will enhance the understanding of how important it is for women to be involved in the economy. And then, of course, the availability of more pro-women choices, policies, and more pro-women products. A lot of times, if you look at microfinance access, many of the microfinance entities require the husband's permission for the woman to work. So that's a mindset change that we have to work on. And then, of course, having women who run businesses be acknowledged as entrepreneurs, that's also a very important recognition. So I'll stop here, and I'd be happy to take questions. Thank you so much.
Thank you so much, Roshana. That was a lot of information. I know that you have been doing so much with the various entities in Pakistan in many different ways and many different channels to reach women. One of the questions that came up is that you listed 4 major type of barriers that women face. One was financial, another is economic, a third being social, including cultural barriers, and then finally political and legal barriers. And it's very admirable that Kashif is tackling each of those barriers in its own way. From your perspective, are there any of the 4 that is more important to sequence first? And if you would be an advocate for that, why would you sequence that first, and which would be more impactful to women's overall empowerment?
That's an excellent question. Actually, it's very interesting. One of the things we learned that you have to have practical solutions to approach a problem. So financial barriers are the ones you can do tangibly. You train women, you help them set up businesses, and that's the first step of the process. Once you've done that and role modeling begins to happen, associated strength begins to happen, it becomes the norm that women businesses are being encouraged, then you can start working on the social and cultural barriers. If we had started with the social and cultural barriers without, let's say, having a tangible solution to the problem, I'm not sure we could have been that successful. So this was not, as I shared with you earlier also, this was not something we had planned. This is not how we had envisioned it. We had started with the financial barriers because of our vision to replicate the Grameen Bank. And that was when we were dealing with the financial barriers that we realized that it's not enough to get the loans and the savings out there, but it's also important to see how is this being used, who has the decision making. And that led us to the next piece, which was to work with men in the community. So I think this is something an organization will learn through time. We had not consciously thought about it, that this is what we would do. So my sense is first thing first should be a tangible strategy, and then you can add the value. You can do value adds to it.
And what would you say to somebody from another financial institution, banks, non-banks, MFIs, that may think that only financial barriers are within their capability to address?
I think that's a fair point. You can't be the panacea. You can't keep adding on things. It becomes too expensive. So the way forward in the future would be building alliances and doing linkages. I think that's something that we couldn't do because there wasn't within our ambit, there wasn't a group of entities that we could work with who were offering these services. But with time, I think we should not be housing everything within our own organization, and that we should work. For example, we are now doing something on education. However, we are doing the financing piece for educational entrepreneurs. These are entrepreneurs who are running schools in low-income communities. So we are doing the entrepreneurship because we know how to do that, and the financing. And then we have another entity that's doing the teacher training and the curriculum development. So I think in the future, a lot of what we want to do should come through building alliances and doing collaborations. So the same goes with the savings product that I shared with you. We're doing it in alliance with the Cash Microfinance Bank. So again, these are the kind of approaches we may have to follow. And where we don't have options where we can build collaborations, then sometimes we have to follow the better pill and do it ourselves. But the good thing is we don't have to reinvent the wheel. There's a lot out there that we can learn from, and so that accelerates the process of implementation.
Sure. And I'm glad you mentioned the savings product. That's one of the things that, I've been working with institutions in Africa, specifically in Uganda, and they see that women there, too, have higher rates of savings than men. Sometimes they use those products to lead in their outreach to women. So I want to ask you, are there certain products or services that you lead with in your outreach to women that you use to strategically sequence how to get them and then bring them in to the relationship with Kashif Microfinance Banks, and maximize value for them and yourselves?
That's interesting. In the past, Liz, we didn't used to have a regionalized approach. We used to do a sort of, as I call it, microfinance meets McDonald's. So everything was standardized. Whether you were working in the south of the country, whether you were working in the center or the north, we had this whole, you picked up the SOP, the standard operating procedures, and we applied them across the board. With time, we realized that Pakistan is highly heterogeneous. It's, 10, 15 miles, and you see a different community with a different culture. And then there are regional differences, very, very stark regional differences. As we grew from, a localized, geographically concentrated program, and we grew to other parts of the country, we realized that we needed to come up with new products and new approaches. In the northern part of the country, which we've just started working in, we are doing, the products that we are offering are essentially financial education for men and women, because we want to first impact on the mindset, plus savings. We're not doing credit. Until we see that the acceptance of women's entrepreneurship and the acceptance of the kind of credit itself and the demand for credit is higher or greater or more visible rather. So again, what we've learned over time is that different regions, and I guess this is true for if you were to assume Pakistan was divided into three or four different countries, it's similar in different countries also. So social and cultural values will determine the kind of services you must offer in the beginning or how you sequence them. That's something we learned over time. It wasn't something we used to do in the beginning. In the beginning, our focus was to become financially sustainable. So by 2003, we touched break even. So after that, we had more bandwidth for experimenting and doing different things. But most of the regionalized and more sort of sequential approaches came over the past 5 years.
Great, and I'll just ask one more question, and then we'll thank the audience and yourselves, obviously. So we assume that a bank has a fairly engaged CEO, but they're not entirely convinced that a proactive focus on women and women entrepreneurs and customer groups is necessarily the way to go. What would you advise, having been through all of this, as the first steps for that CEO?
I think the business case, demonstrating the business case becomes very, very important. What I would, and that whole, that whole process that I shared with you, the segmentation of the market, the demand for the product, the ability for that product line to become profitable. I think that's where you have to do. We need to still do much more of. For that to convince people. So the argument has to be backed by facts. You can't just say, well, it's a good idea because it makes us feel good and it will give us that gratification that we are mission-driven or what have you. That's not enough. I think we have to be a bit hard-nosed about it as well. And so I think if you need to convince somebody who's lukewarm, facts will help and impact will help. So if we can convince them on the basis of numbers, and we can convince them on the basis of that it's being done by other institutions as well, and that it gives you a market, it gives you a differentiation from your competitors, I think that's another piece that can convince the CEO. And then, of course, how do you do this? How is it embedded? Is it going to be an extra product line? Does it require a different mindset kind of competency for staff? These are all questions you have to answer. If it's a running microfinancing bank, of course, then you will have to answer this differently. If it is something that you are in the greenfield and you have to set it up, then this has to be embedded in as part of the projections and the financial analysis. That's how we did it. We looked at the numbers. To biggest challenge for formal financial institutions that do microfinance is the emission drift, or its sort of increase in the loan sizes. When that begins to happen, because the cost of running a bank and doing this to an NGO are going to be very, very different. And there will be add-ons that the regulator will place on your door, or what have you. So based on that, it becomes harder. As your loan sizes increase, your female client numbers begin to fall off. So somewhere, somehow, you have to make sure that that doesn't happen. And that, again, will have to be based on convincing the CEO that this makes business sense.
Great. Thank you so much. I think so much of what you said is so relevant to our audience and at the SBBN. And I know, Roshani, I'll be drawing from it as we prepare and present at our conference next month, talking about financing women entrepreneurs. So thank you so much for doing this lead-in webinar for us to really tackle the topic and talk about the topic of financing women, especially in those underserved areas, especially in, as they're leading businesses. So thank you so much for kind of our ongoing relationship that we've had with Kashif, for doing our webinar today. We can grow together as a network to increase the women's segment that we are serving collectively around the world. So we really appreciate your time today, as well as all of you on the phone who have joined us on our webinar, and we will talk to you all again soon.
Thank you so much, Liz and Lynn. This is a great opportunity, and it's always wonderful to reconnect with all of you. And anything I can do to contribute to your work going forward, I'm always here, just a phone call away. So thank you, everyone. Thank you to the audience for your patience.